perspective. Thank you. Well, Rajesh Kothari is with us, Managing Director at AlfAccurate Advisors. Rajesh, good afternoon. Good to have you here. In the last couple of days, there is today, of course, this, these gas companies down on the back of the city note quoting the oil minister saying, well, companies are still making higher profits, consumers have not benefited, so the street is a little worried. There are hospital companies which have given up 10-15% gains. Again, some regulatory risk emerging there. Why don't you start with, if you own any of these hospital names, healthcare is a big theme with many investors, and what do you make of it within that pack?
Well, Prashant, fortunately, currently we do not own either any gas companies or any, hospital company. Having said that, I think the biggest, what I would say, the risk factor is such kind of a, regulatory kind of an environment is always a risk factor when you, analyze this company. In the long term, how much impact it can make is only time can say. But for example, if you look at Thailand, somebody has done similar exercise in Thailand over the last 10 years when, the government has announced a lot of regulations, but ultimately it had a zero impact on the Thailand hospital sector. So I think hospital is a little bit different business compared to the gas utilities, because in gas utilities, you are directly dealing with the, consumer, and therefore government is a little bit more sensitive, just like how it works with petrol and diesel. So I think whether it is a petrol or be it a diesel or be it a gas, I think all three one needs to put into the same bucket in terms of the such kind of a, citizen first policy of the government. And I think that's true for any country, and nothing wrong in it. And to that extent, one should always keep in mind that it is not a free market economics, and therefore the valuations have to be factored into when you buy such businesses.
Actually, if you're talking about regulatory risk, you can throw NBFCs in as well, right? So it's like obviously all very different businesses. But what's the view, Rajesh? What we've seen coming in from the RBI?
Yeah, Prashant, I think you raise a very important point. There the risk is less regulatory, more compliance. Correct? The regulator is not a problem. The regulator can be across various sectors. Correct? Tomorrow, for example, if you look at in US, how many electric vehicles can come, there is a regulator who says that I will give subsidies or I don't give subsidies. So that is different. And compliance is different. Compliance is part of your business. You have to be 100% compliant. And I think the recent RBI announcements basically suggest that, the regulator is a zero tolerance policy. Correct? So to that extent, it makes the sector healthier in the long term. While in the short term, it may disrupt, some companies here or there, but the institutions are built for the long term. And in the long term, probably, all these companies probably will again bounce back, they will change their model, and they will try to be more, interactive with the regulator, and both will progress together. Because please, understand one thing, that we are looking at next $10 trillion economy. So the regulator is actually moving ahead in terms of how to make sure that the financial inclusion happens at the right time, at the right level, keeping in mind the compliance angle. For example, the disbursement above a particular limit. Now, there's a lot of interpretation that it should be 25,000. Is it 2 lakh rupees? Can one borrow? Can one lend? Can one receive? Can one give? Still, there is a lot of probably confusion, maybe in the minds of a lot of entire ecosystem. But those are the things where one needs to take a little bit hard stand and make sure that the company is compliant enough. So this compliance risk in banking and finance is like US FDA risk in pharmaceutical sector. Those are the real risks, but it's a compliance risk. So if you are compliant enough and you try to improve your compliance system every day, then your PE will be structurally much higher for that particular company compared to company B. So A versus B, it's more about that.
So, Rajesh, fair point. No, absolutely get your point that with oil and gas and, city gas distribution, it's a regulatory risk if regulation suddenly changes. Whereas here it's more about compliance, and the RBI is picking up those who are, the errant sort of participants over here. Now, on NBFCs specifically, because there's a bit of a sentiment washout across the board, right, today. So, Manappuram is down quite a bit. There's L&T Finance that's falling. A lot of stocks are seeing a rub-off effect as well. Now, what would you do and what would you not do with NBFCs? What is the current stance that you have in the portfolio? What kind of NBFCs are you still comfortable holding, or would you buy anything afresh now, given the environment?
I think, as I was saying, there is some, what I would say, unclarity in terms of the reading of the interpretation of Income Tax Act. And to that extent, there is unclarity even probably within the ecosystem, because we were speaking with few intermediaries, we were speaking with few companies, and they are not clear whether about 25,000 or 20,000, whatever the limit, can one lend in cash or not. Can one borrow in cash? Answer is no, you cannot borrow in cash. But can you lend in cash? There is no clarity. And please remember, the cash economy is still very big when it comes to the financial sector, particularly when you are dealing with microfinance or with the low ticket items below 2 lakh rupees, below 1 lakh rupees. And the entire business models are basically convenience kind of thing. Not that everything is wrong, but there is a regulatory interpretation difference. And if it is not allowed, for example, then definitely it is a disadvantage NBFC in the short term. In the long term, everybody will move to UPI, but in the short term, it makes changes to your growth numbers. And to that extent, the banks are the bigger beneficiary compared to the NBFC. And I think that's what Street is reading from last 2 days. And that's why, irrespective of how good or bad the name is of NBFC, most NBFC stocks, as you can see, are down in last 3 days compared to the banking stocks. So I think that's what industry is right now thinking. As an investor, we are also thinking. One important thing from here on, the compliance risk is going to be the real risk. And whether we like it or not, it will come as a shocker to all of us as an investor. It is just straight RBI action, and nothing we can do about it. And tomorrow, suppose there is a relaxation, it will be other way around, the reaction from the stock market perspective. So one needs to look at beyond ROE and ROA, and one needs to look at how strong is your compliance as a practices. And I think that's where market will start differentiating, giving the valuations beyond just reading the numbers.
One mover today on the way up outside of the private sector banks is Bajaj Auto, as its 4,000 crore buyback opens today. So the stock is up 2% at 8,500. And remember, they will be buying back at a price of 10,000 rupees. Rajesh, less than a year back, the stock price was below 4,000. Now you're getting it at 8,500, and you can tender it to get a price of 10,000 rupees per share on Bajaj Auto. Any particular thoughts on this particular, should a retail shareholder tender in this particular buyback? And your thoughts on two-wheelers in the run-up to the elections?
Well, in terms of particular stock specific, I would not like to comment because of the regulations. But two-wheeler space we like from last 9 months, and we have two-wheeler stocks in our portfolio. The reason why we like two-wheeler as a stock, because the agriculture sector is a major impacted sector during last 3 years. It is not 1 year problem. It is last 3 years structural problem at the rural end of the demand. And I think from FY24, that is going to change because of the lower base. Second, the higher MSP prices support by the government. Third is the overall reduction in the cost of inflation. I mean, the cost is coming down, so inflation is down. So your surplus income in the hands of rural in FY25 is going to be higher compared to what we have seen in last 3 years. So therefore, the demand is going to be better. Also, most of the two-wheeler players are also exporters. And if you look at the exports, were also impacted in last 2 to 3 years due to a variety of reasons. So that also probably likely to bounce back. Third, very important, is the electric vehicle threat. And that is basically slowing down compared to what initially Street was expecting, because subsidies have reduced. The fourth, within the two-wheeler space, the premiumization is improving. It means better profitable, product portfolio, and therefore better margins. So net, better volume growth, better premiumization, lower cost, and better improvement in operating profit margin. That means earnings growth is going to be stronger, and you are getting it basically at the reasonably good valuations compared to the overall market, which is trading at a little bit high valuation compared to the two-wheeler stocks in last 3 to 4 years. And therefore, we believe that two-wheeler will continue to do well within the entire auto space.
Okay, all right. Hi, Rajesh. Good afternoon. Good to see you in. What's your view on real estate? Yesterday we had a company that came in there and raised some money. That's Macrotech Lodha, that is. 3,000 crores, that got lapped up. Just an hour or so ago, I checked, the stock was on 6.5%. Now it's almost moved into the green. That's the kind of appetite we're seeing for real estate stocks. How are you all playing it? Why the real estate theme or why the ancillaries?
Well, real estate is typically 7 to 8 year cycle, and I think we are now entering into third year or fourth year. Probably good part of it, since the real estate index has also moved up significantly, some part of it probably is already priced in. So we prefer to be very, very selective within the real estate, theme, and we prefer to play more through the indirect play of the real estate. And a few companies which we used to own, few in plywood, but of course we exited after making huge money. Second is the pipe sector, which we like, and the third is the cable sector, what we like. So within real estate, we prefer to play real estate proxies because we would not like to take the risk related to changes in government policies and and so on and so forth. And that also changes. That also varies for each and every region, and it's very difficult to predict what will be the government policy for each region. So we are more comfortable to play with the real estate ancillary play rather than real estate. Having said that, there are one or two names which we like within real estate space, and that's basically what we own. But that is a very, very limited way in overall part of the portfolio.
Okay. All right, Rajesh, we will leave it on that note. Thank you very much. Good to have you on the show this afternoon. And we look forward to our next conversation. We do have to take a break on the